And we're looking at kind of seeing how the charts settle into the new year. So no quick to trade kind of day. It's more like a, let's see what the markets look like, and let's see how kind of settle in on the beginning of the year. We'll kind of do a quick review of the chart so far and see. Let me just double check, make sure everything's live. We are. Let's see how kind of settle in on the, everything's good there. All right. These are the daily charts. We're in the March contracts now for NASDAQ, S&P 500, and the Dow. So daily charts, let's have a quick look at what we've got here. We're looking at a, we'll mark up the charts a little bit here. We came off the middle of that fair value gap, or that order block right here. Got a nice reaction off that on December 23rd. Took out the highs. There's a little inversion fair value gap. If you guys can see that, let me zoom in a little bit more here. There's a little inversion fair value gap here. We've gone through it, come back up to it, nicely hit the edge of it, then pulled away. Hit the edge of this imbalance here again. Keeping in mind these little imbalances that are sitting in here. Just wanted to kind of show you that little piece there. There's a small little tiny fair value gap here as well. You just kind of mark these things out. Get your year started off with them. How you look at the charts and what are some key levels you want to start highlighting. That's the daily. Let's go to the weekly and have a look at the weekly here too. Sitting inside a big fair value gap here. Let's just put a little, that's what we want. Monthly, we got these equal highs back here. We get a run below this low here. We come back into it. I like the idea of this continue on the downside for the rest of the week. Okay, let's just mark out some of these down here. Put a daily fair value gap here. That's the downside. Upside, we've got a little inversion fair value gap we mentioned here. Let's make sure that's all lined up on there nicely. Cody Trader, how's it going? Good morning, Lee. How's it going? 15-minute here. 15 hours here. Well, you got 15 more hours? Okay, you can't have 15 hours left. I was thinking you got 15 hours till New Year's. It's like, man, I don't know anywhere in the world that's 2 days behind this. Yeah, it's 7 a.m. in the morning here. I'm just drinking water this morning. Christmas was pretty crazy. Not a lot of drinking, but boy, there was a lot of food. A lot of food and family. So let's look at your 3 p.m. Whereabouts you at, Cody? Europe, 9 hours. Nice. I'm from England originally, so I can appreciate the 7 hours. I chat with my little cousins and stuff over in England a lot. There's 7 hours difference. I think the ideal place is right where you're at. 9 hours difference, like in line with Greece. I think that the time frame in Greece, because you can catch the London and the New York in a reasonable part of the day, so you're not up super early trying to catch both markets. That's a place, a time zone that you can capture the best markets, and both of those big heavy markets at the best times of the day. So, welcome, Cody. Okay, so here's some of our I got people in the Breakfast Club already. Happy New Year. That's my buddy Lee. Okay. Let's look at where are we at here? We got another 18 minutes before the opening. Let's quickly go look at the S&P 500. This is Dow Jones is hitting a marker we had before we left. We'll have to dig down in that and say that was an area I lined up before Christmas that I ended up popping a bunch of different things on the charts for it to reach specific levels. And I think this was anyway, we'll get to that in a second, I guess. Old high back in August. We broke through it, came back, tagged it, now we're starting to leave it. So we're looking at the threshold of this on the daily. So let me put some more lipstick on this pig here. I haven't quite touched it yet. We're real close. So look at the mean threshold of this candle. You want it to kind of hold price if you want to keep going back up. But we could come back for a revisit of this right here. There's another one here. Gap sitting right here. Inversion gap sitting right in here. Old high. It's off of a bearish candle though. Not a bullish one. The high's not made with a bullish candle here. Mind you, that's just a daily, so we could probably find a breaker in there somewhere. Down to a lower time frame. I don't think there's much else in that. Broke down below this candle, came back into it, into the body of the candle right there. Pulled away. So now we're really between this candle here, or that candle's low, and this candle's mean threshold. You want to look for opportunities for it to go lower, I think, today. I'm just going to watch this week, I think, and just kind of get my Christmas brain out of the way and just kind of look at the markets and see what we can, see how well it starts to perform. See if there's any shenanigans going on. I was asking if that, did you start Discord or something? Because Skype is kind of old. Yeah, it is kind of old. It was just something I had on, so I've got a few guys I chat with on the sidelines here in the Breakfast Club. I don't use Discord very often, and Telegram seems to be the place to go. So I do have a Telegram account, because I still chat with Michael and that in the mornings. You can, if you're part of the group, you're part of the mentorship, and you're part of his charter members, you still have access to him, as you would know if you're on that group. And we still chat with him every morning. Or it will be every morning now that he's kind of back looking at the charts. He did a nice little trade this morning, 5 handles. So I think if we switch this over to a Breakfast Club and answering questions and stuff like that, it'll be on Telegram. And I do have an account on Telegram. I'll open up a ThetaWaveTrader Telegram. Let me look at that this year, and it might be easier for people versus Skype. We're slowly getting more and more people that want to pop into that Breakfast Club instead of just watching on the screen here. They want to participate more in a one-on-one conversation. Right now, we're not doing much talking on there. People are just doing the same thing they're doing right here, is just dropping notes on the sidelines for me to read. I will okay, let's look at this. Looking at mean threshold. Okay, let's dig down into this Dow Jones, if anybody's trading Dow. They're all in this mean threshold of this order block. All 3 candles, or all 3 indices are sitting right in here inside this candle on the 23rd. If the mean threshold of that candle gives way, look for lower prices on the, well, first of all, look for the next PDRA, which is the rejection block, and then the fair value gap below. So let's look for dig down into some more stuff here. Oh, I'm just going to rip through some of these other ones over here because some people not always trading indices, they would like to trade Forex as well. So let's look at the Dixie. So Dixie seems to be recovering back into this order block here. Look for the mean threshold of this candle here to hold price. If it doesn't, look for there's a little imbalance up in here. And we want to see if this closes today on the daily above this fair value gap. Because now we've come back, we filled it, and we're starting to eat into it, this order block. So if we close above it, look for it to provide potentially some support to go higher into here. Look at this old low here. You can almost draw this out from here straight out as a place to bounce off of. So we might get a wick up into here and come back down and still stay in there. This is what Michael talks about in terms of wick does the damage. So you might have the wick come up into here, touch this old low inside these order blocks still, and still stay below this inversion fair value gap, using that as resistance to continue down. So we'll have a look at that one. GBP. As much as I love my British pound, over the years I got beat up pretty bad in British pound. These equal highs have been taken out. Finally on December 23rd, they got taken out. Now we're running for these lows down here. Getting back into this little consolidation. Look for 50% of that consolidation. See if that holds price. If not, we got these equal lows to run out these equal lows down here. Because then you're going to find support off at these levels here. Look at this down close candle here. When we drop below that, if we come back into it here, find some support at it, look for these lows to get taken out. So I'm really between this candle's high and right now this candle, but if we break below here, then you're really pretty much between these two. To see where price leaves from there. That's pound. As you can see, I'm getting all these reconnected. Same situation here, down close candle, run above old highs. You've eaten through the midpoint of that candle, so we want to see this. Mind you, it's not a swing point. That one's higher than that one. That would be here. Mitigation. Anyway, we want to see this candle here hold price. It looks like it's eating through it now. So look for this fair value gap down in here. There's a little tiny price imbalance right there. On the lower time frames, you should see that in that level there. US CAD, Canadian dollar. Well, we got exactly what we were calling for last year. We're looking for a drive below this fair value gap. If you remember me mentioning we wanted to get below that, come back into it, find some support, and start pushing for these lower objectives, especially this big sucker down here. That's our run above these old highs. So we came back into the top of it here, the open. Now we're coming back into that fair value gap. So you want to see this now provide some support. If you want to get on top of that and start climbing back up against the American dollar, gaining some strength. If it's not, we want to see that mean threshold hold price right now, because that would be a small little fair value gap. See that one right in there? We've come back in, filled it right inside the mean threshold of that daily fair value gap, which is now an inversion because we've gone through it, come back into it. Now there's a fair value gap here, so we're filling that. Do we get a reaction off of that now and continue down? Or do we find support at it and start climbing back up again? So keep your eyes on those. The Canadian dollar there from a daily perspective. Don't forget, I'm giving you a kind of a macro view here. We haven't dug down to find out whether or not this has been a big change in direction, change in market structure. I'm just kind of giving you an overall view of the daily perspective right now. Oh, sorry, we got a whole bunch of people popped in there. Bruno, how you doing, buddy? Check the S&P 500. The S&P has an RSI divergence on the daily time frame, and on the 4-hour time frame you can see a rising wedge chart pattern. Rising wedges, RSIs. I don't do wedge patterns and RSI models. That's not, Michael doesn't do any of that stuff here. But I do appreciate you giving us your input, though. I really do. I'll get right back to ES in a second. I got 4 more minutes. I'm going to blast through some of these. I've got a long trade been on here for a while now. New Zealand dollar, I'm looking for these equal highs to get taken out. Coming back into that order block. We've got Australian dollar. Australian dollars coming back to that order block as well. We get a reaction off that. And these equal highs, I'm still aiming for these equal highs to get taken out this year or this month. US dollar. Japanese yen. So we're still not out of that inversion fair value gap yet. We're still inside it. This one didn't work out. Hasn't traded it, so I had a sell limit order on this yesterday. I had an original line sitting right here and I didn't take it. I moved up a little too high. I was looking at something higher in here, but it literally came up, filled the fair value gap, and then left. So I can delete that order now. I did get the right idea, though, where we're going to go down. So oil, I'm looking for oil to start getting back down into this level right here. On the daily, if you're trading oil, look at these equal lows down here. So this hasn't been, it's been untouched so far. They're not going to leave that untouched. I think that we're going to drive down, take this out. If we get some inversion here, look for these lower prices in oil to get down into $66 range. And then we'll see if it starts to turn. Gold. If you're into gold, I think we were calling this back in early December. Looking at that level, reaching for that level. That was more than taken. Okay, well, I can get rid of that now. So we've had a break in market structure to the downside, come back up inside an order block, inside a fair value gap, breakdown, run for lows, come back up inside order block one more time, breakdown. Remembering that when you look at this level, look at that fair value gap, that impulse lag that occurred when we were, this impulse leg that broke market structure to the downside. I like to see a body break this low, come back inside it. Look at that mean threshold. Then eventual run for the lows. Liquidity down here. Now we've come back up to the edge of that fair value gap one more time, and now we're breaking down. Look for these equal lows here, and then we have a little gap down here. Inversion fair value gap. Look at that, right inside that inversion. It held price all the way back down. Now we're between this guy and this guy. That is a high probability trade. I'm going to quickly get into this stuff. Here to banks. None of that's happened yet, so let's get back over here. So Bruno, you were saying that we got I don't know about your RSI divergences. S&P 500, 4 hours. Let's look at the 4 hours. Let's go into 4 hour here. Let's see what my friend Bruno is looking at here. So ICT type stuff. What are we looking at here? On a 4 hour chart, we have a swing point broken here. We've returned back into fair value and a nice little descent. So consolidation, breakdown below consolidation, return to the bottom of consolidation, 4 hours, boom. Nice little run down inside this inversion fair value gap we got now. So we've run this low out here. There's nothing else in here except this order block, which we've come back into the mean threshold of. And now we got to find out whether or not we get a pull back into these old lows here. You have to dig down into further lower time frames to get your entry. But Bruno, all I see in here is this break in market structure to the downside with a body, creating a fair value gap. You return inside its 2022 model. You hit it right there. Or consolidation, same kind of model, consolidation, break down below it with an impulse leg. You come back up inside it, inside the fair value gap, bottom of the fair value or the consolidation, and then the breakdown. So that's all I can see there. I don't know. I don't do RSIs and that kind of stuff. So a trend line break. Yeah, I do like a trend line phantom break for sure. I see that going on there. So usually what's the rule for breaks in trend line? So usually return to 50% of that, right? So that puts me right in here, running for these relative equal lows here. So this could be the place you're looking for a price to run down into on the 4 hour. Come back into here, consolidation, body breaks down right here. That's the return in the hourly chart we're into now. Order block, hit it, bottom equal lows here, inversion fair value gap. There's tons of different things you can look off on this to find support levels at. We have that inversion fair value gap there. You come back, you broke through it. You came back right to the edge of it right there. Beautiful. Also, order block, fair value gap, bodies. Look how the bodies respect that fair value gap there. Wick just came up inside the wick of this order block here. And then we continue breaking down. Beautiful. That's a really nice price delivery there. So now we're already into the 9:30 open. Bearish is only if we lose big down low. We're trying to mom on the 1 minute there. Let's go to 15. Okay, well, 8:30, 9:30. Keep your eye on these equal lows here, equal lows here, and equal lows up there. We could simply just get a return to the edge of the fair value gap and continue further on the downside. So we've just returned to the edge of this consolidation. The top of the consolidation here, inside that rejection. Yeah, we haven't really hit the fair value gap there. The fair value gap sitting at 16,884. Get further downside. Didn't hit it here either. Bodies of the candles are respecting that order block right there, running for the lows. We got the weekly here. Getting ourselves tuned up for the new year. Where are we at now? Okay. So you're running those lows now. Now we're calling for, there's the regular trading hours gap. They're all doing a nice little run down, so let's just pick the NASDAQ and have a look at what that's doing. Oh, look at that. Beautiful. So let's look at this going, okay, what can we line up over here? Draw right across. Look at that little tiny imbalance sitting right there. It like nailed it on the beezer. Nice. That's a nice little return to that little tiny piece right in here. I want you guys to see that. upside delivery, no downside delivery in there at all. And we just came down and nailed that. Look at that. Through that now, look for equal lows, and then we're looking for, let's do a 1 hour here. Oof, this is slow on the old. There we go. So we're heading for these lows here now. Equal lows. Order block down here. Threshold hasn't been hit yet. So let's look at the first thing is rejection block. We could just get one little support hit right off at the top of this. I think that's a weekly fair value gap there. Is it not? Is it not one we just drew? Man, is this thing slow? Yeah, that's the weekly right there. Okay. That's why you mark your charts up. It's coming right to the edge of the weekly fair value gap again. If it does find a little bit of support there, it's not a support and resistance type of level like retail might think. And they'll say, oh, look, this is all giving us nice support here. This could be just one of those runs. Temporary down on this, come back up into that fair value gap. These equal lows because they were untouched, and then drive back down and clean this out. Get in the habit of marking up your charts for something you can see quick and easy on your charts. We're not like Michael yet. I'm going to just stare at the charts and see everything there. Write it down in a book. You have your little trading manual. Keep your journal entries this year. Start fresh. Get yourself organized. Now, if we run these lows and we get back into this order block here, anytime we approach a low, a significant low like this, at a time like New York Open in 10 o'clock, then you look for your silver bullet entries. Look for the low to get taken out, and if we do get a reversal back into the range we just created between the open and 10 o'clock, anticipate those below old lows or above old highs. Did you guys have a good Christmas? Did everybody have a good Christmas? New Year's? Oh, I guess there's only 3 people there now. I guess there's a couple of us. Let's look at E-mini S&P. It's a nice trend line break there, hey? Like Bruno had mentioned, there's a trend line phantom here. And then they break it, come back up inside it. Discount array inside that range. Discount, if you pull this fib tool here, from the low to the high, oops, from the low to the high, those equal highs, you're not going to leave those untouched either. Look at that 62% right inside that fair value gap there. So that's the trend line that breaks. As soon as you see that break, look for 50% to 62%. Well, 50%, what's sitting at 50%? Well, you got equal lows. So your objective would be aiming in here for 62%. When you're looking at, it's easy for me to say, I know, it's all hindsight. I'm trying to show it to you in terms of if you have a trend line like this, and then you see a break, a significant impulse leg that breaks market structure to the downside, that breaks that trend line, and you look for your entry, which is your typical 2022 entry, consolidation, break down below, come back into fair value gap order block, and you happen to see this trend line, pull your fib tool from bottom to the top, and then say to yourself, what is 50% of that? And what PD arrays are sitting at a discount range? Well, there's a huge PD array down here, this fair value gap, BISI. So that's potentially your first objective is 50%, 62% is in here. These equal lows. Order block down here at 70%. 62% brings you back into this lowest down body candle that starts this whole run. So however you saw that, Bruno, on your RSI indicator, good for you. Using indicators, retail indicators to help you make a call like that. Then you're learning a level of precision I don't know. I don't know how to use. I'm familiar with the RSI indicator. I've tried to build bots around it and spent a lot of time on it. But you can't beat Michael's stuff for accuracy, I guess. But if it's working for you, man, I'm happy for you. I like it. Anyway, let's get back to, let's remove that. We got another 12 minutes. Coming to that now, which is hitting the weekly high there, as predicted. We're going to run those lows now. Or, yeah, okay. So running those lows now, you see we're below them. Order block, look for this here. One, the high, and the mean threshold right there. You had a great time with your family? I like it. How about you? Good to see you again, sir. Thank you very much. Yes, it's good to be back. And I'm loving it. You know, I've had my parents here for, it'll be a month next week, and I love it. My parents are so cute. The older they get, the cuter they get. They're just adorable. I love them. They're in their 80s right now, but they run around like they're couple of freaking Olympians. They walk everywhere. They're in love still. They cuddle. They just love each other, and you know, it's great having them here. It's good having my my wife's dad here, and her son and sister, and then yeah, so we had like 10 people here, and my brother and his wife came out from across the country. So we're in the mountains, and they came from Vancouver side, and they came out from Manitoba side, and yeah, we all met up, had a great time. We went and watched the fireworks on the 1st or 31st there. Fireworks, we're in a small little town, so it wasn't big fireworks, but it was good. It was not like big Australia. Did you see the Australian fireworks? Holy smokes, man, those things were amazing. And there's a one in, I don't know if it was Dubai, they had a huge tower that was firing off just some amazing fireworks off of one of their towers. I don't know if it was Dubai, one of these huge spires going into the sky. They had fireworks ripping off that thing and laser light shows coming off of it. It was incredible. So there's our run on liquidity. Now those equal lows. Now what I want to see is, do we get some resistance off of here? Do we pull back? Does this wick just do the damage? Is this the supposed turtle soup? And again, I'm not making any trades. I'm just trying to get a read on the markets right now for the first week or so. And then unless there's something super glaringly obvious, then you can jump in there and put a low risk trade on it. And as usual, I'm not giving any financial advice here. This is just, everything's done in a demo. All your trades you see are done in a demo. And I'm not licensed to give financial advice. So this is for entertainment purposes only. If you find value in that, good for you. Did you guys have your family around with you this year? Family, friends? I know it's a Christian holiday. I always say that, but we got people from all over the world here. Part of this, if it's not a Christian holiday for you and you don't celebrate that, I respect that. That's cool too. The whole idea of it's just, for me, is I like to see more happiness in the world, more love in the world, less imposing people's opinions on each other. Just, we're all on this little blue ball, this little rock ripping through the universe. We're insignificant on the grand scheme of things. So when you look at our problems, I love the idea that it's a mathematical impossibility. It's already been proven mathematically that it's impossible that we're here. The possibility that you could be created is trillions and trillions to one. And the fact that we're even here it's a miracle, man. I love it. And here we are. Not only are we here on this planet, ripping through the universe, we are trading. And we've all met in this space, in this time now. Wow. Think about the possibilities of all that. Here I am getting very deep for the first official day of the year. Darren's going very deep. Well, don't you think that, beginning of the year, you tend to reflect on where your life's come, what you've done? I'm 58 years old, and I look back on the stuff I've done, the people I've met, and the career I've had. It's been an amazing life so far. Tell me about yours. You guys have a great holidays. Have you met with your families? Tell me a happy story. All right, so we're coming up for 6 minutes. I'm going to start digging down into lower time frames here. That's the mean threshold of that hourly order block. Off grid. You're 58? Yeah, I'm an old guy. '58, yes. I've lived a good life, though. I've had lots of careers. Paramedic, firefighter, 30 years I did that for. Hypnotherapist. I did acting, commercial art. I'm an artist. I draw, paint. That's all just for fun now. Martial arts. I used to teach internationally self-defense programs for EMS providers called the Escape Seminar. Yeah. Diver. I love diving. So keep your eye on this here. I want to see if there's any resistance at that mean threshold. What's the high on that candle? 878. High on this one? 877. Yeah, it's been a pretty diverse life for sure. And always try to learn something new, my friends. The best thing you could have ever invest in is your self. Number one best thing to invest in is you. You're learning, and never be afraid to learn something new. And never be afraid to be wrong. There's no such thing as being wrong. It's just feedback. It's not failure, it's feedback. I'm a firm believer in that. Back when we were teaching NLP, neuro-linguistic programming, which is the same stuff Tony Robbins does. I did my instructor level in NLP down with Tad James and the boys down in Vegas. And that's one of the mantras. There's no such thing as failure, only feedback. It's only feedback. If you look at it as failure, it's going to sabotage you. You just say, oh, that wasn't right. Okay, what else could be right? What could I do instead of that? $23 off grid. God, I love it. 23. I envy you, my friend. 23 years old. You've got your whole life ahead of you, and you're learning one of the most valuable skills for freedom. Creating freedom for your family, your friends, helping other people out. Man, you're learning a skill set that will change the world as you know it. Imagine 35 years of doing this. When you get to my age, off grid, imagine where you would be now when you turn 58. If you keep studying this stuff Accept your feedback. Just keep learning, keep pushing forward, man. Don't take no for an answer. Don't give up. You can accomplish some beautiful things. Now we're back up and through. Let's see how we're getting some support off of that, bouncing off of the weekly fair value gap high. There's 8 o'clock. So when I was showing you the hourly, remember we were saying we're just looking for the bodies of the candles respecting it. The wicks do the damage. That's what we're looking for. Remember I mentioned turtle soup. It's all kind of falling into place for you now, I hope. So 5-minute candle, you see that there's an inversion fair value gap here. We've now filled that. So look for this right here now. Does this provide us a level of support? And we're looking for here, old equal highs up here, and getting back into this regular trading hours gap. So start looking for your 8 o'clock silver bullet entry. So we have a fair value gap here, fair value gap here. Old high right there. So if you put your if this was your fair value gap here that occurred at, oh, that will be the 10 o'clock one, whatever forms in here now. If we come back and tag this one more time, old high, fair value gap, start to make your run for your PD arrays. Look for optimum trade entries for reversals. Keep these things in mind the whole time. There's a lot of liquidity sitting up here still on the 1 minute. So now that we've run out this low, and we're looking for a run back, I'd like to see it get into here. Anywhere inside there would be stop loss down here. Now you want to see some of this stay open. Perhaps come back, tag that old high there. We could get down into that order block, but we've already hit that first entry there. Now you're looking for 5 handles, 10 handles, whatever you want for a quick snap, for quick profits. So from that little entry point there, 72, there's 10 handles already. Dusted, if you're into 10 handles. I can see two scenarios here. One just returning back to this old high. This is the open of that weekly fair value gap and then running up, or coming all the way back into a deeper discount. We still have that mean threshold yet. So we could get it. We've taken out these little trailing lows, but it's not in the 50% of that range, I don't think. No. Go to the high of that range there. 50%'s here. There's your 10 o'clock fair value gap. Silver bullet entry, full fill. What is your opinion on using 1 hour as a higher time frame and 1 minute for entries and just stay in there brackets of the time? Yes, absolutely. Cody, yeah, for sure. If your higher time frame objective, which is, you should always have a higher time frame objective. So if you're looking for a return to these old lows here on your higher time frame, that low there, or just to run back into this fair value gap, well, it's not really a fair value gap yet, but rebalance this price here to 816. Go back into your 1 minute. 16, 8, 16, 16, 8, 16, which is these old lows here. So that will be your objective if you're just trying to snatch a bunch of pips on the higher time frame. Absolutely. And you should always think about your higher time frame objective as what's dictating your bias, right? Whether it's daily. If it's your daily bias, then your daily bias is lower, then go with your lower. Enter in on your 1 hour, or look for a 1 hour entry, and then 1 minute for your precision. And wasn't it the daily we were looking for it to run down? The wicks did the damage. Yeah, there's a lot more draw on liquidity on the downside. So we're just trying to catch a retracement on the daily. So this is like a counter trend. If we're just looking at the silver bullet, you'll see why I'm not a big fan of silver bullet entries right off the 10 o'clock. I like to wait for about 10, 12, because if you got the hourly candle, your wick is usually forming in the first 15 minutes, and then you get your run. So if we get something big here, then your entry would be here in the next 4 to 6 minutes. So we have order block. I'm going to make this bigger so you can see this. So you got to kind of look candle for candle. That candle gets validated when we get below it right there. We drop down into the fair value gap. See how this body actually trades below the edge of that fair value gap right there, right? We come back up inside it. Now it becomes inversion. Comes back up, hit the bottom of that wick right there, pull away. Fair value gap. Drop into it. We've hit the edge of it. Coming back into order block. Are we going to continue down? So you got to lose the mean threshold of that, and you want it to start coming back up if you're bullish. This is all supporting a bearishness now. So that little fair value gap you got it for 10 o'clock, the silver bullet, so-called silver bullet entry, right off the 10 o'clock. It could be any one of these because it's between 9:40 or something like that. this could be the first one here. Even though you look at 10 o'clock, they look for the first one. It could be any one of these three. So optimum trade entry, 62%. Optimum trade entry puts you right in on that first one there. After 9:30 or just before 10 o'clock. Break in structure, break in structure. I want to see this order block give way. And then you want to look at trying to get on top of this right here. Then get some support on that and start running. Or we could look for a deeper optimum trade entry for run up. If we lose that order block threshold, we're still going down. That's kind of, you just take a look at it and not do it at that time much more on the daily. On the daily. So you got to think about the different types of trading styles that you've got, right? If your trading style is to snipe 10 handles, you're looking for something that's, you don't mind sitting in it for hours, you'd be trading on the daily. If you like to just trade the hour candle, then this sniping stuff's the stuff you're looking at. And you'd be looking for, so your daily bias on an hourly candle may not be if you're trading inside of an hourly candle, may not be the bias you want to go with. You want to look at the hourly candles for your bias, because you could be getting a 1 hour retracement back in a bearish day, like a 1 hour bull candle back in a retracement day. So pick the time frames you want to find your bias in, stay with that higher time frame bias, and trade inside that based on the lower time frame entries. So right now we still got this inversion fair value gap. We're still at the 50%. We've gone into a discount range right here. We're back into that little discount. Fair value gap filled. It's good. We're losing that. I like it. So now we're looking at trying to get on top of here. So you want to see this inversion fair value gap now provide some support. All right, I'll be right back. I'm just going to have a little bathroom break. I'll be right back. Just keep your eye on that level. came back inside that. So we came back inside the inversion fair value gap here. More of a positive for a downside versus an upside. %, optimum trade entry. So now, see how you got 1, 2, 3 different options on your silver bullet entry? Is this just the wick and we're looking for this guy to provide support for us to continue down on the downside? So I'm not crazy about those first ones. Not that Michael's wrong. I would never say that guy's wrong. This is just my opinion. And who am I? So there's the fair value gap I would typically go for a short. Stop loss would go up above this thing here now, this inversion. So you're off this fair value gap here, which is a breaker. Last down close counter before a run above these old highs. We've come back to the breaker, find support. Order block, fair value gap, continuation. You want to see that breaker get eaten up, and we're going to continue down on the downside, which supports more along the line of the higher time frame downside objective. But if our higher objective on the hourly was to just reach that, I think it was the bottom of these guys here, 816, that fair value gap there is what you're looking for. You want this to hold price. If you want that first 10 o'clock silver bullet to hold price, stop losses here. If you're aiming for there, you want that to hold price. If you're looking at the after 1010 fair value gap, that one there, you want to see that give up price to go short. So you can argue both sides of it. What does Michael say if you can argue both sides of that? Stay the hell out of it. That fair value gap is filled now. Keep an eye on that in your own charts. I'm going to quickly whip through a couple of other things here. Let's look at Bruno's one that you talked about this morning. This trendline phantom break. Fair value gap fell. But one more time they ran down into optimum trade entry. Now look for old lows, that range. Dig down to the 1 minute, see if you can find anything in here that would support price. Not yet. Maybe here. Consolidation above, come back down to the top of it. You want to see that start getting above here now. And then looking for price to run just above that high. Got equal highs sitting up here. That's your 10 o'clock fair value gap there. You want to see that whole price now and continue up. Let's look at Dixie. What's Dixie up to? Order block we mentioned earlier, old low. So we're still pushing into that. We hit the mean threshold of that order block. Almost hit the mean threshold. So you up 1, 2, 3. Sorry, 1, 2, and then that old low there. Then look for your lower time frame break-in structure with a body, not a wick, to see if we've got the reversal happening. Swing point, break. Order block on the hourly, 15-minute, I should say. 15-minute, come back into it. So just keep your eye on the Dixie if you're looking at Dixie as well, to see if it supports price on the downside now. Now that we've hit a level, a logical level for it to react off of. British pound running for the lows. We're looking for it to run down into here, lose that order block, lose this big order block here, mean threshold. It's going to lose that before you consider further downside. CAD, it's come all the way to the top of the daily fair value gap, which is now an inversion. Does that provide support? And we start to come back down now. Look for a logical level of retracement. So look at your lower time frames for confirmation of a return. We don't want to ever pick a high, but when you get to that high and it starts to get confirmation on the lower time frames that you've made that high, each one of these will give you stronger confirmation, supposedly from the 5-minute all the way up to the 1 hour, that might have been the high. So just look for anything that proves that narrative. Underwater in that one. Old highs here. I'm looking for this to provide support here now. Australian dollar, order block. Confirmation. Mean threshold. Breakdown, come back up into order block. Come back down into order block. One more time, equal highs. Mitigation. Dropping off here. It's more downside. Japanese yen still inside that. Well, it hit that objective we drew out here earlier this morning. Hit it nicely, and now we've had a nice reaction off of that. So could have done a nice little trade off the oil. That's the one we drew out this morning. That would have been a 200 pip. 200 pips could have made on that. It's good. We're just getting ourselves lined up for the year. Bash off the cobwebs of 1 week of sitting back, eating Christmas turkey and getting all that turkey brain. We got that high. Get rid of all this now. Put this on after Christmas or before Christmas. That's good. What are banks doing? Are banks leaving yet? Roll banks on the run back. Wrenching banks coming back to these equal highs here. I'm going to put a line in here. All the way back to the body. Between there and there. Scotia Citigroup, TSX. Oh, they dropped. Okay. Futures wheat. And that thing's been slowly. I've been looking for it to come into here for a while. I think I did a trade on here way back there. Where the heck was it? Yeah. I had a trade in here. That would have been huge by now. But I don't trade futures. I just saw it. I thought, well, just trading the algo. Just made a little tiny bit of profit there. But I was looking at this fair value gap. Sorry, it's not a fair value gap. It's just a gap. A gap in price. Looking for the mean threshold. Or the consequent encroachment. Sorry, not mean threshold. The consequent encroachment of that gap. And a fulfill. It's one of those ones you would have stayed in since I got in on that on December 12th. And we'd still be in on that. Now, I don't know if they charge you swaps on that. I don't know. There are a bunch of ETFs I'm in Canada. These pay like ridiculous dividends. Like this one pays 12-13%. They're all like more than 10% dividends. And one of them pays 30%. I got in down here at 3 down in here, right there. And that one pays 30% dividends this month. You get your first dividend check. 30% per year, by the way, but it pays monthly. Anyway, let's get back over here and see what's going on. So we did get more downside. So you found some support inside there. Remember, we were saying this kind of supports my idea about don't always go with the first silver bullet entry that you see. Wait for the wick to form on the hourly candle. Wait for that fair value gap to form after 12 minutes if it's not a definite run up. Like if you know that that's a definite, your bias was full on, that's going back up, then yeah, I would have jumped in on that. But there's your 15-minute mark. See that fair value gap? Come back into it, almost a full fill, but it's right off the top of the fair value gap weekly. Look at the final, look at the support there. Came down, tagged it one more time. Now we're working our way down. Run the lows. First point of exit right there. And now we've hit that mean threshold of that hourly order block that we talked about earlier. Right on it. Now, do we find a level of support there? Or do we continue further down into that, digging deeper into that weekly candle? Takmila. Ooh, that's a neat name. Welcome. You're new to the group. Welcome, welcome. Today's fast. Today's making some moves, let me tell you. So as we know, we've got a stronger bias on the daily, right? We saw what the daily and the weekly are all, we line these up beginning of the day. There's a lot of liquidity pull down here. Even the monthly one looks like it's coming back in to fill these equal highs here. Equal highs weekly. Daily equal highs. That's where I'll be looking. So if your bias for the rest of the week is on the downside, look for it to come back into, find support on the weekly high again, right there, off that candle, and then continuation on the downside. I did mention that earlier in the show. We want to see it break down below this and come back and find support at this. We've got a wick through it, so I don't like wicks, I like bodies. Wick came back, stopped on it, popped up to the body of it right here, and then we've got a continuation. So that's that. Go back to the hourly now. There's a last little piece of that fair value gap here on the BISI is yet to be filled. So as we continue to eat through this order block here, the mean threshold, I want to see that give way now and continue on the downside. So my original trade I was telling you about this morning, where I would have, like I said, I would go in here for a short. I'd wait for all this stuff to happen, the short to occur here, and then you've got a run till about now, 8:36, 8:30 to 8:36. Look for a swing point. There's 8:33. That's potentially the swing point. 36. This could be right off this mean threshold here. So we're 8:37 now. bit bigger so you guys are melting your eyes. So like I said, when I typically would enter in on this one here, I would have taken out a small portion here. Who's that? Is that my dad? I only got 20 more minutes, and I'm going to go spend some more time with my family. And we're just getting started on this year, so we're just trying to get it all dialed in. And if you've been with me before, you'll know that I like to read each candle. I like to play in these lower time frames and read each candle. I'll try to give you an overall perspective. I start off my one with for the daily, but I do like to play with each candle as it forms, how you get validation off of each one. So as soon as it gets below that candle and you come back up to it, I like to look at the full analysis of every candle that forms. That may not be necessary for some people, maybe too much. And I tend to miss the forest for the trees. I watch how each tree grows and how we react off of it. That's why I am here. I am just like that. 100%. Good. Then we have something in common, my friend. The next thing you want to focus on a lot is time. And when things start to react at specific times. Now, I created a whole series of bots that would go back in time, and it would search specific parameters, and then it'd make a spreadsheet that would give me specific parameters on time. I was just looking at time only. And the bots would look for one piece of information, I'd send it back through a bunch of years, and it would gather up some information, and I'd have to spend hours and hours with some friends correlating it, putting it into a chart, making a spreadsheet on it, so you get a better idea of what happens at specific times. Everything from days to minutes and even seconds. So the next couple of minutes, we're looking for another swing point. Remember, this is non-farm payroll week, so if you are brave enough to want to actually do some trading this week, not only is it the beginning of the year, it's going to be potentially quite crazy. We also have non-farm payroll, so be careful how you trade. Be careful about how much you want to put in, because there's plenty of year left. You never want to rush this. As soon as it starts to level out, Michael doesn't actually start getting into it, and it's going to be exciting to see him in the Robbins Cup this year. I'd like to see him kick some major ass, and hopefully follows through with everything he's talked about. And I wish him all the best. I can't wait to see the kind of damage he's going to do to that thing. He's going to blow it away. And he's not going to be starting to trade until, I think, second week of February. So those who are in the Robbins Cup this year, look for the guy out front. That's Michael. I've got 100% confidence in that guy. I'm just so excited for him. He finally gets to get all those naysayers and put them in their place. Remember I said that this was a turning point? Go back through the video. You'll hear me tell you right there at that time. And then the next few minutes, order block, old low, he just did another killer trade. Good for him. He's going to destroy Robbins. Right now he's just doing some, those of you who are following him on his Telegram account, if you're privileged enough to still be part of his mentorship, you'll see he's just done another ridiculously profitable trade, and he's just playing. He's just getting started. I'll be done in about 10 minutes, Dad. 15 minutes. So if you're following him on that, then check that trade out that he just did. It's pretty awesome. So you see this fair value gap here now that we filled it? See how the bodies are respecting that? We have a turn point. This is potentially another turning point. For the next couple of minutes, there'll be another turning point. So you want to see that provides a level of support to come back to it and then continue down on the downside. Or if it bangs around inside there for a bit and then finally pops out of it, find some support at it, look for a run up into this fair value gap up top here. This is exciting. Going to be an exciting year, people. Stick around. It's going to be fun. And I'm not charging for anything. I'm just here to share what I know, and hopefully you can share. You have a free place to share whatever it is you know, and know you have a safe place to express whatever you want, even if it's something completely different. Like I hope I didn't upset our Bruno guy this morning. I don't trade RSI stuff. I don't trade wedge patterns and stuff like that. But I do like trendline phantoms. So you're not wrong. If you have retail and you come in here with retail, I can't give you any support on that because I don't know retail. And I'll be honest, I'm not going to bullshit you there. I don't know anything about retail trading at all. So you're pretty much on your own there. This is mostly it's only ICT stuff. Occasionally you'll see a bot. I'll be building a bot, and I'll try and build a bot and throw it in on an MT5 chart so you guys can see what it looks like, see how it's working, and some of the things I'm after, or things I'm trying to discover. Otherwise, this is just whatever we've learned in ICT over the years. Or if you're a newcomer to ICT material, I definitely recommend that you don't buy it from anybody else. You just go into the free stuff that Michael's been gracious enough to give you on the internet. Check out his platform at ICT on YouTube. Go through his free videos. And if you're truly dedicated, you go through all of his videos. Like go through his this core material and his 2022 membership or mentorship. And then from there, just keep plugging away at all the material, everything, every video you can get your hands on. Watch them all, make notes, and don't try to blow through them. Like a lot of people, I've seen people in here say, well, I'm going to watch your stuff, I'm going to try and get through it all. It's like, you're already making the one big mistake as you're trying to rush through it. It's going to take years to get through it. It's going to take years to hone your skills. You're not going to learn it all in a week. You're just not. So take your time. Anyway, here's our fair value gap, right? We want to see that break above it, find support at it. Or if we want to continue on the downside, which is where our bias is, we come back up. The bodies of the candles respect that. The wicks do the damage. The body of the candle holds inside here. Now when we break down, we want to see it break down below that low. There's a body breaks below the low. Another one, and then what do? We come back up to order block and continue further downside. So this was only a fair value gap fill. You didn't even get the luxury of coming back into it and tagging it here. None of those spots were a tag. But keep it in mind, draw it out on your chart. Always look, inversion fair value gaps are great things to provide levels of support or resistance. Especially if you have an overall bias to go lower. Old lows. See how the old lows are getting tagged? Now what would be nice is to leave that open. Just tag the edge of it and then continue down. So keep that on your radar. Bouncing off that mean threshold again. So we're working that. So we get a fair value gap fill. bodies of the candles are respecting the fill. Now, do we get lift off from above, or do we go down below? So again, I look, not only do I look at each candle that starts to form, like the trees we talk about in the forest, each one of them that grows. It's like Cody, you want to start looking at these things as well. So not only do you look for the fair value or the order blocks and how they form and how you can get support or resistance off of different portions inside that, or PD arrays inside that order block, you also look for these developments of these fair value gaps, the SIBI, and when it turns into an inversion fair value gap, and do we find support at it. So see how we've got a body right here that went above it, that body closed above, we came back, we tagged the edge of it right there. Look for that kind of precision. And now you want to see a continuation on the upside. It can dip down all the way to the bottom of this one more time. And what time am I looking at? 8:53. So another couple of minutes, we should see another swing point. I like the idea. So before I leave you, because I got 6 more minutes and then I'm going to go spend time with my fam. I got 1 more week left with them, so I want to spend as much time with them as I can. Look for potential. So think about your 12 o'clock, your lunch hour. Are we going to get a full run down into the top of the daily fair value gap here? Or are we just going to clear out this low, whatever low happens before 11 o'clock? We take that output at 12 and then start to run back into the range, keeping your eye on that higher time frame regular trading hours gap on your hourly. We're getting these swing points are really tiny. Again, keep your eye on this guy right here. %50 of that wick. Lori, buddy, how's it going? How's my buddy down there in Trinidad and Tobago? Did you have an awesome Christmas? Hope you had a great New Year too, man. It's nice to know you're safe. No fires, I hope. So as you can see, we got this, the turn point we're looking for right off this order block here. Now you're up between that guy and this guy, but we're inside this guy, so look for inversion fair value gap now. We're between the two of them. You want to see this guy give way, come up, find support at him, and continue down. I think we're going to run some more low first before if we do get a run back in lunch hour. I'd like to see that get taken out one more time before 12. Can you tell us and explain a little bit about when and how you are expecting a swing to form? Well, Cody, and that's what I was telling you about in terms of I built these probes that go back and look for specific swing points. And it went back through time on the 1 minute chart, the 5, all the way up to daily. And it finds specific swing points. What are the most common times? And I'll allow you guys to look for some of these, so see if you line them up with the same ones that I got. Because if I just give you them all, you just write them all down, but you don't really see the turn point. So look for these specific times where you look for a swing point occurring right here or here, and say to yourself, every time there's a swing, what time does that swing occur? And does that swing occur at specific times every single day? Because this is the part about Enigma that Michael's not allowed to tell you, I think, that is all based on time. What you see in the charts is really, it's not the chart, it's time. These charts are more based on time than they are about looking for a little order block, filling it, little PD arrays and stuff like that. Time is more critical than anything else that you see on the charts. So I'll leave that to you guys to look for specific swing points at what specific times, and then go back through your charts, and you need to research your charts and say what specific times do these periods occur. So 55, 56, 58, there's your 57. Come over here. 58 right there. See that swing point? So specific times. And this isn't just random shit here, guys. I'm not just pulling something out of my ass here. I did a lot of research on this. And I had friends that helped me out to put this stuff into coding, and thank you for that, Steve and Richard. They helped me. I bring the probe, give them the probe, they go looking for the information, and we come back and we codify it. So you'll find specifically, or you can anticipate, and there's 2 specific times that are so freaking strong that it's incredible. Now you do those and you line them up with specific PD arrays, you start getting to some significant precision. And those are you who are still with Michael. He's talking about precision and time being very, very critical. I'm good. Ate a lot. I just had 2 car fires, no casualties. You gotta love a good old car fire. As long as you got your mask on, you don't have any of those boys down there sucking smoke, do you? Like the old smoke eaters. We used to have old guys that there was some badge of honor to stick your beard in your face and just filter your smoke through your beard, or not that we had any bearded guys like that, but you know what I mean. You got those old guys that refuse to wear they put the pack on their back and they don't actually go on air. And it's one of the most dangerous environments to be in is a car fire, because there's so much cyanide gases that are coming off of the plastics inside these cars now. So I hope you're wearing your BA, man. Don't ever fall into that trap of, I don't want to put my BA on. Put it on every single time. That shit is so full of toxic stuff out there now. every 15 minutes or 1 minute time frame. Every 1 minute, every hour, every second has specific turning points, Cody. Every specific one. And if you look for those turning points, you'll see it on the daily. You'll see it on a weekly, monthly. Maybe on a video if it's not in confidence. Yeah, maybe I should do a video on that. Kind of share that with you guys. I'm all for sharing stuff. I'm not trying to build my own little secret pool of information. I don't mind sharing it with you guys, but I want you to do the work too. I taught for 30 years, so I understand if you just hand people the information. I want to teach you how to fish. I don't want to give you the fish. I want to teach you how to fish. So I want you to do some work, come back, give me some ideas of some key areas that you see swing points at. And then I'll start sharing more and more stuff, what I've learned on that. I'm not holding it back. I'm just saying you got to do some work too. What I discovered, I took 1 hour candle in 1 minute and take previous hour candle and current one gives me opposite swings at previous 1 hour candle and 1 minute time frame. Yeah, there's specific candles that you can expect a reversal on that candle. And you can expect, I can tell you where the majority of the time where you'll see a reversal occur at 1 hour and then a reversal on the next hour and then a swing point occurring on in the next couple of hours. Yeah, there's lots of neat stuff you can do with it. Took a 1 hour candle on a 1 minute. Take previous hour candle and current one gives you opposite swings. Previous 1 hour candle in a 1 minute time frame. Interesting. Lots of smoke eaters. 58 swing point. 50 swing point. 45 swing point. Go back, look at 45 minute. Look at 55 minutes. They're around within 3 minutes of a 50, a 45, 55, 58. Look for those times. There's a few of them I'll give you. But that's 9:05, my friends. It's 9:05. I'd like to stay with you a little longer. And after next week, when my parents are back in Manitoba, I will be spending a little bit more time with you each day as we get further and further on into the new year. I'll be spending some more time trying to get these morning and afternoon macros dialed in. So look at your 11 o'clock. Look for that your next silver bullet entry. I like this guy down here. But again, wait for your 12 minutes after and see where your fair value gap lines up. If this comes all the way back down here within the next few minutes and tags that for a further run up, stop loss would go here. And you're looking for just a runs back up to that weekly fair value gap high again. You're coming back into that breaker right there, right on the top of it. Beautiful. Now you can expect further upside, hopefully. But if you do get that guy there, you don't want to lose the mean threshold of this again. So I wouldn't want it to go below that low. But anyway, that's it for me, my friends. Like 1045 high, should be 1045 swing, previous 1 hour. Like 1045 high should be 945 swing, previous hour. Yeah. So every hour it does the same thing. There's setups that occur every single hour and every minute if you're trading on the second chart. you take this down, and remember, any theory that you come up with, if it is not provable on every time frame, it isn't algorithmic. That was my rule. That was my number one rule when I developed my looking at specific times, is can I prove this on every single time frame? If I can, it's algorithmic. If I can't, it's random, it's bullshit. It's like, oh, sometimes it works, sometimes it doesn't. Then it's not algorithmic. It's not a specific data point that they're reaching for. That's the specificity that I wanted from it. So that's what I looked for. And it took me a few years to take that theory, and with the help of some friends and allowing me to talk their ears off and go through my process, I slowly started untangling some of this stuff on the minutes. That's why you see me go and look at every single candle that forms at specific times. But with that, I will leave you guys until, oh, sorry, I got another one. Check that too, man. You will be surprised. 9:45 should be 9:45 swing in the previous hour. Yeah. Now, a 45-minute candle is a potential turning point. It's a swing point. 44, 42, all swing points, all within that 3-minute range. So if you're on an hour, 45 is a great time, a great one. So I will see you guys tomorrow. Thanks for popping in, and thanks for sticking around. I love you guys for popping in and just sharing your stuff with me, man. I love it. And thanks for sharing with other people. And that's what this new year is about. I want to make sure we all grow together. Let's see if we can build some huge accounts this year. And the journey. Let's just enjoy the journey. And we got friends, man. We've got friends to enjoy the journey with. That's what I like. You make new friends along the way. And we help each other out. I love it. Anyway, I will see you guys in the new year. Happy New Year. And I will see you tomorrow. All the best. Love you guys. And